Hey guys, how you all doing? So Dan from Trading with Dan here. So today we're going to have a deep dive, a sort of case study look at how, basically how I trade the TD Sequential, and what other sort of tactics and things that I use to trade. And we're going to use copper because copper's been a really good example, a really nicely trading market for myself. And yeah, so we're just going to have a deep dive into that, and so I can it's sort of like a tutorial video where we can just go back through back in time in the price of copper, and then yeah, we'll look at basically the trades, what I'm looking at. I've taken all my annotations off the chart, so yeah, so we'll go straight over to those charts. So this is the 4-hour chart, so I was zoomed out there, so we're going to zoom in, and we'll probably start just for the sake of basically the sake of just where to start. We'll start here, so we'll start on this 9 here. So obviously we have this 9 candle, and we've had quite a nice move down, so we're potentially looking to try and, well, we can even look at this one, we're potentially looking to time a retracement and move back up. So this first 9 here, obviously what we'll do, we'd have a line across here where we'll be potentially looking for an entry, and so if we break above here, if we close a candle above this 4-hour, or start trading above this 4-hour, if you want to be a bit more, there's two different ways you can do it. You can wait for a 4-hour candle close, or you can wait for us just to trade above this candle, then you could enter a trade. But you can see we don't get one, so there's no trade there, so we'll just sort of leave that there. There's no trade. Right, so the next 9 is the one I was going to start on, but we just started on that one. So the next 9 here, so here we go. Here we have the 9, the top of the 9 candles there. So again, we're waiting for a candle to trade. Well, this is why I like it to close above, because you can see this candle traded above, but it didn't close above, so it didn't activate the trade for me. So yeah, we didn't get there. You can see that line did offer a resistance of sorts. And then yeah, then we just came back down. So here where it gets a little bit more complicated, because well, we don't get a 9, but we get to an 8. So this potentially could have been a 9, but it was quite a strong candle. So it's you could almost consider we sort of front ran the 9. So if you wanted to, you could say right, we're going to have a line above here. So if we trade above this level, if we close a candle above this level, then I'm gonna enter the buy trade. So I'll just move this up a little bit. So we're above the 1. So say if we close a candle above here, then I'm going to enter the buy trade. So you can see no candles closed, no candles closed, and eventually we do get a candle closed here. So okay, we could enter the trade. So if we wanted to enter a trade based on closing above this candle here, we've had a bit of consolidation under here. We've had a few pushes down, pushes lower, lower than obviously what we were here. So yeah, we might think, okay, we'll look to enter a buy trade here. So we could enter a buy here. And then fair enough, we come a little bit offside, but it's not too bad. You'd look where to have your stop. I mean, ideally you'd have your stop probably below the actual here on the candle. So you can see we don't get anywhere near where your stop is. And then yeah, the market starts to move up. So what you can see then, you can see, right, so we're getting the 8 candle come in. So I'm looking to see where I want to take my profit. You can see we open the 9 candle here. So then you could think, well, I'll let this 9 candle play out, or I will just move my stop loss potentially to basically the break of the 8 candle. So obviously you pretty much, that 9 candle will open, we trade pretty much straight down there. Well, I don't know if it trades straight down there, I don't know the duration of this candle, but either way in this period of 4 hours, I mean, because what could happen, we could just basically open here, trade here for a bit, and then in the last like 5 minutes of the 4-hour candle drop down here. But yeah, but you don't know how. But either way, you could have your stop under here, your stop, which is not a stop, it's your sort of take profit here, and then take it. Or you could just be moving it up with these candles. With this nice big red candle here, green candle, you probably would at least moved it to halfway up that candle. So if your take profit wasn't here, it would probably be here. But yeah, either way, that would be a great trade. So then what you could then look for, so right, okay, you've had the 9 candles. So if we get a close below this 9 candle, I potentially want to enter a sell trade, obviously for the continuation down of this move. Obviously we don't know the market. We're only here. We don't know the market's going up at the moment. Going to go up, sorry, because we can't see obviously into the future. So right, so we'll draw a line under this 9 candle. And we'll be like, right, okay, then when we close a candle below here, I will basically look for a short trade. So we close this candle underneath here, so we close down here, so we can then put the short trade on. obviously it's quite a punchy trade. Obviously we've got a big candle here. You may or may not. Obviously you guys will know that I find it difficult to enter trades once you've already had a big candle. So it's sort of like, do I really want to do this or do I not want to do this? Just because we've had a big move. But yeah, so if you did enter, either way, you are entering at basically the bottom of this candle, because this is basically where it would have closed. So the next one opened here, so you're entering short here. And then yeah, it's just you're going to have this little sort of loss here, because eventually you're going to have to decide, well, we're not moving up, we're not coming down. We get close to your not your entry, but this was where I would have my stop, because this is obviously sort of this horizontal support here. So if we get up to here and we trade there, then I'll be out of the trade basically. So it's not a big loss. We don't quite touch it there, but yeah, obviously we break through it here, and then we're out of the trade for a small loss. But not to worry, because we've made a bigger gain here, so we're already in profit from trading these nines. So, and then we're all just waiting for our next signal to enter a trade. And as you can see, we just price flip around, not really too much going on. You can kind of see we're getting guided up by the 21, then we sort of lose the 21, then we get guided down by the 21. So you can see you've got a good idea of what is happening in price action. We're sort of getting guided by the 21 here. So again, there's no nines. There's no nines until we get to here. Right, okay, so we've got a 9. So we've waited quite a long time. This is quite a long time not to get a 4-hour 9. But we've got one. So we've got basically where we can enter a trade. So here is the level. Here's the top of the top of where the 9 candle closed. Sorry, not where the 9 candle traded, not closed. So you can see we close the candle above here, we enter a trade. So yeah, we basically, and this next candle did just close us into a trade. So this one is a bit difficult because we obviously have a high range candle here. So it'd be a case of where are you going to have your stop. You're in the trade here. You probably would be conservatively say, right, I'm going to have the stop down here. Because obviously this is the low of the move. So what would happen in this trade is that you're actually going to get sticking to that pretty strict rule, you're actually going to get wicked out of the trade here, just because this candle does come and trade down there. So depending on how you do manage your risk, you may have it lower. You may have this line here is actually called the risk line, but this risk line obviously won't have formed here before you actually have the move, because obviously this risk line is based on where this candle comes down to, so it is slightly useless. But yeah, so you could potentially have taken a bit of a loss depending on how wide your stop is, but assuming you don't, obviously we get the move up here until we get to a 9 candle, and then you'd at least be taking your profit on this candle. Or definitely once we close the candle below it, because that's sort of when we are looking for a potential move down. So obviously the move down would be we get the 9 candle here, so the move down will be a close below this level here, which you can clearly see we can draw this all the way along here. You can clearly see we get the close below on this candle here, and then it is very so yeah, so basically you would enter your short here, which is not necessarily ideal, because we've got another big candle. So again, this is a case of, well, we've got a big candle. Do I want to enter the short? But assuming you do want to enter the short, obviously your stop's going to have to be well, basically a close above here. You may give yourself a little bit of leeway. Obviously with stops, we've been obviously where you're placing them, you can give yourself a little bit of leeway. I mean, what would make sense to me in this situation would be to have it basically at the 200 where we kind of touched here. Because clearly you can see we literally just stopped on our stop up here, but the 200 is obviously a great place to have it, and you can see we reacted off it quite nicely. So obviously you need to have some bit of judgment as to where you're going to have your stop loss. Obviously these ones down here, you've not really got a lot of help as to where to have them, because we're clearly moving down. But yeah, so I would have had my stop. I would have basically entered this 9. In all fairness, I probably would have entered. I would have entered once we started trading lower after the candle here, so I'd have got the move. But if you want to be conservative, you're going to wait till you close below the 9 candle, and there you can take the short there. But like I said, I often will take the trade on the next candle if it just trades below the 9. So you can see how that works out. You've got the 9. If you trade above, then you would enter there. It's a pretty similar trading, apart from just sometimes obviously you're going to end up entering before sort of a big candle. So you got the 9 candle here. As soon as you start trading below, I'm short from up here. So again, that one's a better trade than being short from down there. So yeah, I mean, that's one way of getting around these wider candles, because I know in my experience that these candles, these 9 candles, can be important. And I also know the 200 period average is moving average is quite important, but I know they're quite important. So I would be comfortable taking a trade once we start trading below that 9 candle, in which case I've got the whole move down, which is great. And then I would be looking to obviously waiting to get like a new 9 candle, but we don't get there. We get this big indecision candle here, and then we get a green candle, and this is sort of telling me that the market is reversing here. So I either need to take my profits, have a break-even stop loss, that's what I'd be looking to do. Basically, I wouldn't be looking to just stay in the trade with this green candle and this sort of indecision candle here. Obviously, this line that we drew here at the top of the 9, you often find these levels are just important. You can see where I've drawn them. You can see where I've drawn this one across here. This one was obviously based on this top of this candle here. You can see how that line's sort of respected. You can see how this line's respected. You can see how this line's respected. So what you do come to know, you come to realize when you are drawing these lines for these entries, that these levels are important. So you could have thought, right, okay, we're going to come down here. I'll maybe want to take some of my profits. So we've had a big move down. We're continuing to get a move down. I'm not sure how this candle paid out into intra candle. We could have moved up first and down, or down first and up. Obviously, it's most likely we moved down first and up, because the next candle's then up. So obviously, it was like we went down, up, down, and back up again. It would be more likely that happened than we went all the way up, all the way down, then all the way back up again. But either way, so what my point is, in my experience, these levels are important. As you can see now, you guys can see these levels are becoming important. So that would be at least a partial take profit for me. And that's another aspect of trading, just in general, is that you want to be taking partial take profits at convenient places, at places that look like they may bounce the price. Because if they do bounce the price, fair enough, you take the rest of your profit, basically either at a break even or at some point on the candle back. But then you've also locked in some of your gains at an important level, an important support level or resistance level if you get there. So anyway, that's what would have happened with that trade. So taking partial take profits there, then also then we would have taken probably with the rest of it would have taken the halfway up this candle here, which then would have got triggered there. So then we are then waiting for another trade now. So we have the 9 candle here. Here is the low of the 9 candle. Again, drawing it across, you can see the importance of it. We sort of get above it, but get rejected from there or thereabouts of the line. So we get the 9 candle. We then start trading below. Obviously, this is a big candle. On what I've just said to you guys, we'll usually enter basically just once we start trading below the candle. So we're straight in this candle. We open up basically the next trading day. I'm guessing this is the weekend, the 6th of March, the 8th of March. So yeah, and then we get in the short trade. So we have a nice short trade down. No real targets, nothing to aim for. We start to obviously get some big movements up. You would definitely have your trading take profit halfway through this candle here. And yeah, you would end up hitting your trading take profit. This is quite a big move, so obviously this move down, you may have taken some partial profits at some arbitrary point that you pick down here, maybe based on a percentage move that you're potentially looking at. So let's say, yeah, I mean, this has come down like nearly 3%. So yeah, maybe 2% you took some of the profit, and then obviously the rest of it you took back up when we started to move back up. So again, we hit the line here, hit the sell line again. Obviously we reject from that line. So you could look at the overall trend. This is another aspect of my trading, a sort of thing that I'll do. This is how I know that a lot of sort of momentum traders play. They know the overall trend is down. They know the moving averages are down. The moving averages in the right order, 250 and 21. So they've seen a sort of rejection. We come back up and tested them, rejected them. So as soon as we start trading downwards, you could take a short. That is something that I would do. Take a short, especially because I can basically I sort of have this thing in my trading, whereas if I sell something, make a profit, we're still in a bearish trend, it comes back up to my level and I can sell again. I sort of think to myself, well, I've got a nice leeway here, a leeway of this profit I've made that I can afford to lose on this by entering the trade basically again, have another crack at it. So obviously you could be at the 200 because I know the 200 is important. I know we're in a downward sloping market. So my stop's here and look, we have a great trade down. So that's not technically a TD trade, but again, like I said, I'm sort of talking you guys through some of the ways that I will trade, some of the things that I will look for. So yeah, that would be something I'd look for. I'd see a breakdown and I'd be like, yeah, right, we're getting rejected basically about the same level I sold. We're rejected by the moving averages. So yeah, potential move down and great move down. So tricky down here. There's no real 9 comes up. There's nothing to look for. There's no trade that I could take here. Obviously other than getting out of my profit from my short that I would have taken. Nothing to look at. I mean, again, we pull back into the moving averages. This is a bit of a strong move. And I also don't especially like pushing my luck, and these are sort of, we're getting big high range candles now, so that would get me a bit spooked. So I'd like to say this time again, yep, I'll sell again based on where we are, literally based on we're not far off exactly the same level. But like I said, I don't like to, this would have me a bit, this basically had me thinking, okay, are we just going to break up the 200, break the 200 now? But in all fairness, in hindsight looking at it, it obviously was a great trade entry. The set exactly the same principle. We pulled into the moving averages, we got rejected again, we're all splayed out, showing that the trend is basically strong downwards. So this would have been this would have been a great trade. And yeah, I mean, maybe at some point I would have thought, right, okay, I'm gonna have to run with this one, but yeah, I mean, I know that, well, basically I know that I didn't, and I was just thinking, is it this obvious? Are we just going to do it again? But at the end of the day, I now learned from that, it is that obvious. And there we go. So what we have now, we have a 9 candle here. So we draw our line across the top of the 9 candle, looking for an entry. No entry anytime soon. But then what we get down here is an absolute picture perfect reversal candle after a strong move down, after we've got quite a bit of a distance away from the moving averages. So after this candle being printed on a 4-hour, I am them definitely looking at. Also, we broke a psychological double O. Look, it's not a double O, it's like a quadruple. We've broken a psychological level of $2 basically here. So I'm thinking, okay, we broke the psychological level. That clearly would have been a target for this quite a big move down here. Basically breaking above this doji, this is a textbook candlestick trade. Breaking above this doji candle is we just enter a long trade. So here's your long entry. Here's your long entry basically. We'll draw it all along there. We'll just make this a bit shorter because that was the 9 there. Here's your long entry. And then yeah, it's just a great trade. It goes up. You've got to decide where you want to take your profits. Obviously up here would be where I would have a definite partial take profit order, but we don't quite reach it. It looks like it sort of gets front ran. So as we start to move back, we'd look like we're rejecting from that level. I'd definitely be taking partial take profits then, and then the rest of it would get triggered. It would be triggered somewhere around in this area, sort of half of the range up that we've had. I would take the rest. So I probably would end up taking all the profits around here. Obviously not quite getting here, which would have been a bit annoying, but hey, just is what it is. So waiting for the next trade. So we don't really have much going on. We've got another one of those opportunities that I wouldn't take, because this time, because we were in a downward trend. If we were in a because we're in a downward trend, if we were in an upward trend, then I'd maybe look to take a buy, but this is sort of like a double bottom. This is sort of looking like I could take a buy entry, basically put the same buy trade on again, and it would have been a great trade. But obviously we're in a downtrend, so I'm not going to be looking to do something like that. So I'm waiting for the next candle. So we get a 9. Here is the 9 candle here. So the low of this candle is kind of here. So looking along here, we do eventually break below in this candle here, so we're going to go short here. And then it's the case of where would our stop be, and our stop, there's no real moving averages to look at because we're in and amongst them at the moment. So our stop pretty much just has to be the top of the 9 candle. So you can see this trade is obviously, this trade is just going to be a stop out. We don't get any other 9 buys or any other signals or anything like that. It's just a stop out at the top of that 9 candle. So that would be a losing trade. So that's just it is. That's just trading. And then we get another one up here. Another trade. We'll just move that out of the way a bit here. Well, it doesn't want to go. Oh, it's because we've drawn another line, that's why. So we'll get rid of that one. I think we're drawing another one. Looks like there's another bit there. Get rid of that one. Right, here we go. So I can click on this, move this out of the way. Right, so our next sell trade is the break below here. We get this we'll draw this along again. We get this because, again, obviously I just want to keep showing you guys the importance of these levels, look. So we break below the candle, we get the sell trade, and we move into the moving average. We sort of get guided up by the moving average, and then yeah, we basically break above. Our stop is just going to be the top of this 9 candle, so our stop is going to be here. We just hit our stop, and then we just take a small loss. It is what it is. Unfortunately, that's 2 small losses that we've had, but we've had some big wins. All our wins have pretty much been bigger than these losses, so that's just is what it is, guys. So we have another move down, another nice long wick, another nice candle, another clean, easy, basically entry. You could enter it on basically when we trade above or when we break the candle above. Obviously, you know, guys know that I'll usually enter it once we trade above on the next candle. So I'm long here. I'm long here watching the market go into a 9. We get the 9. I'll be looking to take some profit on the 9. We get the reversal candle, a mini reversal candle. It is a reversal candle. It's not got a big range. I can't remember exactly, but I probably would have taken profit just looking at that candle, knowing that we were, well, I mean, saying we were in a downtrend. Obviously you can now see the moving averages are really just all together, so we're not really in a trend at the moment. We're just, and we know we're not in a trend because we're sort of getting these movements that aren't necessarily going very far. But we've had a nice buy trade. It's covered basically both our previous losses. So I would basically probably taken the profit there. I mean, obviously if you'd have sort of like a trailing take profit, you'd probably have it up somewhere around this level here. Yeah, quite actually probably in line with this one across here. If I extended this line here, that would be a good level for a trading take profit until obviously we move further away. So you could have then ran it more if you were a bit more disciplined than I would be. But yeah, it would be another great trade. So anyway, we are then waiting for the next 9, and here we have it. 4-hour 9 candle. We'll draw it along. You can see how these levels are important. The 4-hour 9 candle, we enter a short trade. We basically come down practically to a 9, but it's an 8. So we are looking to take some profit here. And then we're just trading for the rest. So probably half the move. So around here, distance half the move, we take the rest of the profit there. And then that is what it is. We're out of the trade, waiting for the next 9. Which then we get up here. I'll just move this out of the way a bit. So we get the next 9 up here. We basically trade below it on the next candle, so we're in a short. We come offside a little bit. We'll draw it across so you can see the importance again of these levels. So we break below it, we're in a short. We actually get a 9 here, but we haven't moved much. So you could look to take partial take profit there, which I would do with it being a 9. And yeah, run the rest, see what happens. And yeah, we do come down a bit, so then we've got to look to where we are going to take the profit, and you just have to choose. We're in a tight range here, so you just have to decide where you wanted to take it. But obviously you would take it well before the trade went into break even or even a loss. So we get another 9. This is basically nearly a 9 up here. We get the 8. This would have been a 9 until obviously we closed a bit lower. So we're looking for a break of the low of this candle, which is basically the next candle. Basically the next candle here. We'll just get rid of this. Which is basically the next candle. So we'll draw this line across here. We get a very nice sell trade all the way down to the 9. You'll take some profit down here, and the rest of it you'd have to take off at some point. I mean, you then would actually be looking for the buy once we went above the 9. So we trade above the 9. You are looking for a buy trade, and then the buy goes up to the 9, and then you do the sell again, and then we get the move down, and then we get the buy 9 here. Which would have been a 9, but it's an 8 of 1. But yeah, so when we trade above there, you're back in a long trade, and we're literally back where we are now. So also, what I didn't really show you guys, also what I would have done was as soon as I can sort of see a trend forming like these highs here, initially I'm sort of putting a trend line in here, but that's not really been respected again from obviously after pulling it in. It is the first time, and then we don't really get up there. So after a couple more, after basically we've got these next 3 checkpoints, and I can draw a line between the 3. I then draw another line across here, and yeah, you can sort of see we are basically, this is sort of started forming like an upper channel now, an upper resistance. We kind of see this next one came in there, so I'd maybe adjust it a little bit. And then the next one obviously came, well, I'd probably just leave it around there. Obviously to the downside I would have started drawing a channel around here. This was looking pretty nice channel. We did basically get rejected, so it's hard for me to then say, well, I can't move the channel here, but I'll just be like, well, we have broken through, but then we do then basically respect the line, respect that bottom of that same channel that we drew again, and then we come down, we basically respect it again a third time. So I've got a pretty strong looking channel here. We then obviously, you can see we do break through it a couple of times. I'll be reluctant to move it because obviously all the touch is there, so still extending in that same channel. We get a really nice touch of it down here as well, and then obviously moving it back up to where we are, extending it to obviously where we are now. Obviously you'd extend these into the future, obviously when they're drawn. You can see that we are we tested below it, we got back above it. Once we got back in the channel, we then started to look like we're going to move to the top of it again, and this is where we are now. So this is how I would obviously use channels as well. You can see it's not perfectly perpendicular to each other, these lines, but yeah, that's just where the lines are, where they touch, where they would be. We get a few moves out of it. No trend line's going to be perfect initially. The initial one we draw isn't of much relevance, so you can see during the process of this trend, we do actually draw these lines in, these trend lines in, and then also we can adjust them when we need to, but we try not to adjust trend lines. We try not to adjust them because, like you can see in this example, fair enough, you can break them, but they can then still be rejected. You can break them again, but they still get respected. Just because they get broken at one point, it's not, if you've got say 3 points or 3 points, just one break through it isn't necessarily enough to invalidate the whole channel. That's just sort of like an overshoot of the channel, basically, of the support line. So you can see the interplay between the TD sequential setups and the moving average plays that we're going to use moving averages once they're in play, because you can see we do kind of get guided around a lot by above the 21, then we get below it, then we get back above it again, then we get below it, then we get back above it. We are guided around, guided down by it. We are guided around by moving averages are important, basically, is what I'm trying to tell you. Channels are important, and then also the TD 9s are very important, as you can see, where they all come in, 9s, 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 now, where we've just been through the whole trend. So I hope that was useful for you guys as a sort of tutorial on the TD sequential. This is basically how I trade. This is how I traded this asset over the course of this year. This is sort of the moves that I will look for. This is how I look to trade. This is basically it will give you an edge overall if you stick to this strategy. Obviously you're going to get some losing trades, but obviously you're going to get some great winning trades. You're going to get some really nice moves. So overall you are going to basically do okay, at least do okay, and at least you're not going to lose a load of money if you trade like this. Remember, this is not a financial advice. I'm not a financial advisor. So yeah, as a trading toolkit, TD sequential, an understanding of interplay between moving averages, and then also looking where to draw your trend lines and your channels. So there we go. So right, so thanks for listening, guys. I hope that was useful for you guys. Basically as a sort of introduction to the TD sequential if you don't already trade it or know how to trade it. And yeah, thanks for listening, guys, and I will speak to you all soon.